Hi, everybody. This is Simon here from eToro, better known as Turtle Capital, popular investor. This is the monthly update, portfolio update for March. So, in this video, I'm just going to be covering the current portfolio, what I'm currently holding, any changes that I've made to the portfolio, recent performance, and if I've got a little bit of time at the end, I will share a bit of information, data, maybe one or two charts. So let's jump in and let's go to the eToro website. I'm just going to share my screen. And we can see here, obviously, we've got the overview of my performance. So obviously year to date down just over 25%. Over the last 2 years, I'm up 232%. Risk score is currently 4. If I go over to the stats, we can actually see performance is negative for the year. This is mainly caused by the drawdown that was experienced in February, February falling over 24%. So if I can just very, very quickly explain that, because this is really not so much as sort of losing investments or investments being sold at a loss, but this is more so the fact we had a lot of open profit on a lot of cryptocurrency related positions that did fall at the start of this year, notably in February. This is when the crash in Ethereum happened. It broke below 3,000. Now it's down to low 2,000s. A number of other crypto tokens have crashed in February, and obviously that gave us a hit. You're probably wondering, okay, so what have you done about this? Because it's not great. Losing money is never great. I don't like it. I'm sure you don't like it either. I have made a lot of changes to the portfolio to avoid this situation repeating again this month. So you can see we're currently on a small negative return for the month. Again, a lot of that is due to crypto, but actually I have completely de-risked in terms of crypto holdings, and you'll see that when I go through my portfolio. But my general view is, look, we had a fantastic 2 years with cryptocurrency investments. Since over the last 2 years, even including this drawdown, the portfolio is still up over 200%, well over 200%. And I'm absolutely certain that over the next few months, I will be able to make this loss back. So it is still my target to perform this year and see a positive year, hopefully a double digit positive year. I think is still completely uh, to be expected, really, especially with some of the opportunities that I'm starting to notice in the market. So that's the performance. Obviously, you can really see what has happened with the portfolio's risk over the last few months. We were obviously high risk. Last month, I started to de-risk. This month, the risk has come down even lower. So yeah, that kind of just gives you an idea as to the positioning and the performance of the funds, and obviously the positioning becoming less risky. And this is the portfolio. So as you can see, Bitcoin is still the top holding. It is the one cryptocurrency that I'm happy to have exposure to in the current environment. I think Bitcoin over the long run, the bullish case is very, very clear. We've just had President Trump sign an executive order to create a Bitcoin strategic reserve. And what they're going to be doing is putting all of the seized Bitcoin that they've seized from, different law enforcement cases into this strategic reserve as like the seed amount. And from there, they're going to be researching and exploring sort of budget neutral strategies, it's been called, to acquire further Bitcoin. So whether that will be converting other seized assets into Bitcoin, I would think that's a pretty smart idea, with obviously Bitcoin being the one that tends to hold its value best, or whether that's some other strategy they've got. People have rumored maybe they'll sell some gold to buy Bitcoin, obviously going from analog gold to digital gold, Bitcoin being an improvement on gold as a superior store of value. I totally believe in the bull case for Bitcoin myself. So look, right now, currently 9.3% invested, and it's 11.5% of the portfolio. Honestly, I think short term, we could still go a bit lower on Bitcoin. So I wouldn't be surprised to see Bitcoin come down into the 70,000 range, potentially between 70 and 75,000. At these levels, I will be accumulating more Bitcoin. I'm happy to bring the portfolio exposure on Bitcoin up to around about 20%. I think that would be a good area to do it if we see those sorts of prices. So yeah, very happy with the Bitcoin exposure. Some changes now. So I've held TLT for a while. However, the TLT, which is the 20-year Treasury bond ETF, that has been increased. So that's been increased to over 5%. I've also added another two bond ETFs. These have been added at over 5% as well. So that is obviously over 15% in bond ETFs. The reason behind this really is the fact that the US administration have said it is a target, it is an objective of theirs to get the dollar down and also bond yields down. Now, bond yields are inverted with bond prices. Obviously, if bond prices are low, it means demand for bonds is low, so they have to offer a higher yield to attract investors to actually buy those bonds, to actually push up demand. And then, of course, when those bonds get bought, then obviously the yields start to come down as demand increases. And obviously, as demand increases, the price of the bonds goes up, supply and demand. Okay. So that is really the reason behind being in bonds. And also, it's just a good hedge for the rest of the portfolio. And it's good for diversification purposes as well. So you can see, like, obviously, we're not going to expect any wild P&L swings in these positions, but I would have thought over the next few weeks or months, these can accrue maybe a few percentage points and obviously just protect our capital. There is interest as well. There are dividends that these pay out to. So fairly stable as an investment. Certainly considering the current macro environment, I think bonds should do well over the next few months. Next, we've got Tesla. So Tesla was, I think, in the last video, probably number two in terms of the holding. I still have over 7% in it. And Tesla's at a really, really important support level. So if I've got time at the end, I will pull up the Tesla chart and actually show you that. But I have added recently to Tesla after accumulating Tesla a lot lower. I think my lowest entry is around $140, $150, held all the way up to $500, sold some of it's obviously come back and to levels that I'm interested in accumulating Tesla at. So we've got Tesla, we've got the NASDAQ 100 index. So this is the CFD product for the NASDAQ. I like the level that the NASDAQ is currently at, that it's coming to on Friday. At the end of last week, I started to add these positions on the NASDAQ. So again, at the end, if I've got time, I will pull up the NASDAQ chart along with the Tesla chart just to show you what I'm seeing on these. Nvidia needs no introduction. Obviously, the number one stock for AI exposure that I think you can get. And technically, it's at a level that I'm interested in. So again, doesn't mean that if stocks don't bleed further, I might look to trim some of these positions. But for now, I think they make sense to have exposure to. Certainly, given the sell-off recently in the stock market. USD JPY, so dollar yen, short the dollar, long the yen. So I'm obviously short this pair. This means that you're short the front pair. And to be honest with you, it's really simple. The Federal Reserve are about to cut rates. I think that is no secret. It looks like it's a matter of time now before they do cut rates. And because we're starting to see the economy slow, we're seeing signs growth is being revised lower. We're seeing sort of jobs starting to ever so slightly weaken. So and obviously, Doge and Elon Musk are actually sort of delivering austerity to certainly to the federal government with a lot of federal layoffs. So US dollar are forecasted to lower rates soon, and the Bank of Japan are forecasted to increase rates. So pretty straightforward. US dollar should get comparatively weaker, and the yen comparatively stronger over the course of the next year. So, pretty simple short. Then we've got some more stocks: Palantir, Amazon, Google. So again, no introduction. Obviously, a couple of Mag Sevens. Palantir, very strong growth stocks. I do think growth will do well over probably the back half of this year. So it's really just looking to establish entries now, whilst these things are at good prices. And the other thing I think really to mention, like I say, there is some crypto exposure, but my crypto exposure right now is hedged. So if you look at this Cardano position, you'll see this says short. So this means I've actually sold Cardano and I'm actually profiting from Cardano as it falls. So if you see, I've got 1.8% short on Cardano. I've then got a 1.46% long on Near. So between these two positions, they're actually fairly well hedged. Okay, close to 1.5% short one, 1.5% long the other. And that's what I've tried to do. It's like here, I'm sort of long 1% long on FET. However, I've got nearly 1% short on H bar and the same on XLM. So yeah, playing sort of like long short strategy on altcoins here, ones that I feel can outperform, ones that I expect to be a little bit stronger, I'm going long on, and the ones that I think will underperform, that are overinflated, that maybe have poorer tokenomics or have had a lot of recent hype, I'm looking to go short on. And if just some sort of background between being long Near. Near's founder are going to speak at the Nvidia have a conference later this month. I think it's about in 1 to 2 weeks time, around the middle of this month. So yeah, their founder is going to be speaking at that event. The last time this happened, Near really outperformed the rest of the market in the run up. So I think Near could catch a bit of a bid going into that event. Obviously, anything AI related tends to be good for AI cryptos. So similar idea with Fetch AI. Sonic that I'm long really is due to the TVL growth and the fact that I think from a value perspective, comparing market cap to TVL, Sonic looks very good. On the flip side, you've got ADA's market cap. If you divide that by the number of active daily users, it's something absolutely extortionate that in terms of the value per active daily user. Long story short, there's just not the usage. There's not the usage of things like Cardano, of things like HBAR, things like Stellar to actually justify their inflated valuations. And a lot of it is hype. A lot of it is hype around the Trump administration. Obviously, Donald Trump last weekend tweeted about Cardano and Ripple and Solana being in a strategic crypto reserve. That was a load of hot air. And of course, I'm expecting these assets to depreciate, to fall in value over the next few days and weeks. That is why we have gone on with those ones on the short side as hedge shorts to the portfolio. So a fairly balanced portfolio, I like to think. And of course, if we go all the way down to the bottom, we can see I've got 20% balance, so 20% cash balance. I will be redeploying all of that. I will also be shifting some funds out of the bonds into stocks, into crypto when the market tells me that that is the right thing to do. When I see that the stock market has bottomed out, when I see that the crypto market is starting to turn around, I will go back to more aggressively positioned on the long side. For now, it's about capital preservation and it's really about avoiding any more months like the month we just saw in February, because of course, if this goes much over 25%, if this goes over, 30%, 35%, then that's going to be a lot to obviously make that loss back. Right now, I just need a 50% gain and I'll make back 25%. Remember, you have to double the return to get back to the loss percentage, okay? Like if you're in if you're in an asset, say the asset is trading at 100 and it goes down to loses 25%, goes down to 75, then from 75 back to 100 is more than 25%. It's closer to, sort of 30, 40%. So this is why it's really important to minimize the drawdowns. And that in doing that, when the market goes back to more sort of favorable conditions for longs and we can start to take more aggressive risks in the market, we will eat back this loss very, very quickly. I have no doubt about it. And I'm feeling very optimistic, especially for the second half of this year when, I will be putting on a lot more long exposure. But for now, it's important to be defensive. So that is the portfolio review in terms of what I'm holding, a little bit about why I'm holding things and why I've made changes. I did say I would look very quickly at some charts. So if TradingView wants to load up, I will jump into a few charts. We're going to start with the NASDAQ then. Obviously, the NASDAQ CFD is one of the markets that I've put a long position on. And what I'm looking at here is I'm looking at this confluence that we have on the NASDAQ. This is obviously the daily chart, and you can see we've come into two trend lines. We've got a third ascending trend line coming into play. So we've got trend line support. We did lose the 200-day moving average, which for many people was a concern. For many people, that was a reason to get out and to panic and to sell. However, we found support on the 50-week moving average. And if you look at last year in the summertime, we actually found support at the same moving average, that 50-week moving average. So I've been happy with picking up some tech stocks here, obviously taking the NASDAQ long as well. And we've also tagged the 50% fib retracement from the summer low last year up to this year's high. So I like this as a level. I hope it holds. But we might just get a bounce and we might roll over again and potentially we come down lower and we come down to this 100-week moving average. So I'm going to be analyzing the market on a day-by-day basis, and obviously, I reserve the right to change my opinion any given day based on the latest available information. As a trader, that is something you always have to do. You don't want to be stuck just blindly holding investments, believing that because you've bought, you must be right. You have to be very adaptive. It's one of the most important things in trading, and this is what I'm currently seeing. So for now, I am long. The other thing I wanted to look at quickly was Bitcoin as well. So obviously the biggest holding in the portfolio. And just giving you an idea of what I'm seeing, this is a potential path for Bitcoin. Maybe it doesn't happen this quickly, but we also have 50-week moving average. We've got the highs, the post ETF launch highs from March last year coming in around about 74,000. And we've also got this ascending trend line from last year coming in around about 74,000. So we've got a big cluster of support here. And if we actually trade down into this level, these zones, call it sort of 73 to 75,000, that is where I'm going to be looking to add more spot Bitcoin to the portfolio. So that's what I'm looking at for Bitcoin. And I did also promise I would take a look at Tesla and Nvidia. So let's have a quick look now. So Tesla on the weekly, you can see we've got a triple confluence of weekly moving averages. This is the 50, the 100, and just below the 200. So strong support. We've also got a trend line from the highs from 2023 and 2024 pre-breakout that we're actually coming in to retest. And we've also got this ascending trend line from the lows from last year as well. So there is plenty of confluence here on Tesla, and that is why I've started to add to my position. And the other one I said we would take a look at was Nvidia as well. So Nvidia, it has briefly lost its 50-week. However, it is trading within this bull flag or this channel. But this is obviously, a bullish consolidation pattern when it forms in an uptrend. And as long as we hold this low, then we can potentially drift back up to the top side of this, and I'll be looking for a breakout. We're also at the 618 Fibonacci retracement level, and not too far below that, we actually have the 100 week. So potentially we do chop around, and eventually this trend that we're in could actually intersect with this 100 week, and maybe that becomes a strong buy. If that does happen, that will also be coming into the big round number, which was $100. So potentially that is a level that I'd be looking at. If Nvidia does go lower, it would also retest the high that we made back here as well. It's always healthy to see markets retest their previous highs as support. So yes, that's coming in around about 97.40, and I'm actually just going to sort of mark that on here. So that would be something like that. So obviously, if we do continue to sell off into next month, into April, then I would have thought this would likely get hit, and that would be another level I'd be really interested in buying. So I'm going to end things there. Hopefully that's been informative. Obviously, if you are a copier, congratulations. Hopefully you found this useful and you can get an idea of my positioning and what I'm looking at. And obviously, acknowledge the fact that I've tried to de-risk and protect the portfolio and protect capital in the short term, just whilst things are very, very uncertain. And obviously, as I start to get more confident that we are going to be going higher and that the worst is behind us, I will position in more aggressively in an attempt to make back that loss from February and finish this year very, very positively. And I genuinely think under the Trump administration, we've likely got a good sort of 2 to 3, maybe even the full 4 years of upside to come in the stock market. Obviously, Trump is attracting a lot of inward investment into the US. Tariffs are having the effect of more investment coming in, which is going to increase more jobs in the US as producers, as suppliers actually look to avoid those tariffs by producing in the US. So obviously, layoffs are happening right now, but this is probably going to be a very, very short term thing. Rates will be coming down at some point this year as well. That's going to ease liquidity. And the first thing that's going to recover in the market is going to be the stock market. I think stocks go to all-time highs before Bitcoin, and I think Bitcoin goes to all-time highs before crypto does, and crypto will probably be the last thing to move. That is why I'm fairly crypto light right now, because I think we'll have a sort of front-running indicator by seeing the stock market bottom start to push up to all-time highs. We'll start to see Bitcoin bottom as well. And then if it looks like it warrants us taking on additional risk by going into cryptocurrency, we can do that. And obviously, if cryptos do have some upside later on this year, that will really accelerate the gains. But obviously, I'm going to be cautious just whilst that is uncertain. Okay, so I'm going to leave it there. Thank you very much for watching, and yeah, I will talk to you all again with another update next month. In the meantime, I'll be on eToro. So any questions, feel free to drop me a reply or tag me, and I will come back to you. Thank you.